There's like 450 million people in the world that have crypto, some kind of crypto asset. Bitcoin is spreading virally. There's hundreds of millions of people that own Bitcoin. This is an idea whose time has come, and it's a fundamental idea. We have developed a technology that empowers humanity and empowers the individual. It provides property rights to 8 billion people. It provides freedom, economic sovereignty, and the promise of sovereignty and dignity of the individual to 8 billion people. And we do it with cryptography, semiconductors, and the internet. So it punches all the buttons, right? It's about technology, it's about freedom, it's about empowerment, and it's about money. And those are all interesting topics for people.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In today's video, Michael Saylor asks the most crucial question: is it too late to buy Bitcoin? Saylor compares Bitcoin against real estate and shares his knowledge of how his company's stock outperforms all S&P stocks by following the Bitcoin strategy. So without wasting any time, let's dive into the video.
The truth is, the only thing I advocate is if you have a portion of your portfolio that if you have money you don't need for 4 years and you want to hold it for more than 4 years, for between 4 years and the rest of your life, that's your long-term investment portfolio, then you take a portion of that and you buy Bitcoin, which is digital property. You know, if you want a diversified portfolio, I would say you buy some rental real estate or some real estate you're going to hold as a store of value. Maybe you buy a market basket of high-quality stocks that you think will last for a decade or decades, or you buy the S&P index, and then you buy collectible items, trophy assets you want to hold your entire life, right? That's normally what goes in that basket of long-term assets. I think the apex property of the human race is Bitcoin. Bitcoin is Manhattan in cyberspace. If you think about investing in Manhattan as a good metaphor, the question is it too late to invest in Manhattan? Well, was it too late in 1680? No. Was it too late in 1776? No. Was it too late in 1865? No. Was it too late in 1914? No. 1945? No. 1976? No. 2000? No. What is the story of, and why is that, by the way? It's because Manhattan's built on an island. There's a limited amount of land. It's the nexus, the commercial center of the North American trade network or the Western trade network. Everybody with money and power wants to go through or needs to go through Manhattan at some point in time. That's been the case for hundreds of years. Everyone that ever bought real estate in Manhattan bought it from someone that paid less for it than they're currently buying it for, right? Mm-hmm. And why does it keep going up? It keeps going up because we keep printing more currency, right? So scarce, desirable assets go up forever. And in this case, is Bitcoin safer investment than Manhattan? I think so, because Manhattan competes with Tokyo and London and Paris, and Manhattan is just a physical city. Bitcoin is the center of the digital commerce or of the digital economy. It's like the capital city. It's the nexus point of the entire digital economy. And it has appealed to everybody on Earth speaking every language. You could think of it as a city that's 276 blocks high, 276 blocks wide, 276 blocks deep. That is the integer cube root of 21 million. And when you're buying one Bitcoin, you're buying just one of those blocks. That's how many there's going to be for 100 years, 1,000 years. No one expects there to be any more.
Following the ETF's launch, Cathie Wood has received significant attention for her predictions about Bitcoin's future price. With this institutional green light that the SEC has provided, kicking and screaming though it did, the analysis we've done is that if institutional investors were to allocate a little more than 5% of their portfolios to Bitcoin, as we think they will over time, that alone would add $2.3 million to the projection I just gave you. Wood noted at an Investor Day conference in New York. The new prediction is higher than at the start of the year. In January 2024, Wood stated that Bitcoin could hit $1.5 million by 2030 after the probability of the bull case has increased with this SEC approval. This is a green light. Before approving the spot ETF, Wood predicted that Bitcoin could reach $1 million by 2030. Wood's investment thesis on Bitcoin relies on significant levels of institutional adoption. While it is plausible that if institutional investors allocate 5% of their portfolios to Bitcoin, the price could reach $3.8 million, it is unlikely to happen by 2030. Although institutional adoption has increased significantly in 2024, unprecedented changes in the institutional landscape would be required for this to occur. The prediction for 2030 also factors in the next Bitcoin halving, expected to occur in 2028. Historically, Bitcoin halvings precede higher highs followed by higher lows. If this pattern continues into 2030, the price could peak around 2029 or 2030, potentially aligning with Wood's price prediction. If Wood is correct and Bitcoin reaches $3.8 million, a $100 investment in Bitcoin today would be worth $5,510 in 2030. This translates to a compounded annual growth rate of over 95%. While the prediction is bullish, Bitcoin's 14-year TAGR is well over 220%, so it is not entirely out of the question. However, as Wood noted, it would likely require substantial institutional investment.
Bitcoin is the most popular, most well-known financial asset in the world that is an investment, right? I mean, it's second to the dollar, I suppose, as a pure financial thing. Everybody knows the dollar, but the dollar is not going up in value measured in dollars. So the dollar is only an investment asset for people in economies with hyperinflation. If you went to 10,000 rich families and you said, how'd you get rich? Not by buying dollars. How'd you get rich? Not by buying gold. Now that you are rich, what are you going to buy? Dollars? No. Gold? No. What are you going to buy? A sports team? Maybe. Right? Leonardo da Vinci paintings? Maybe. The Magnificent Seven stocks? Maybe. A Bitcoin digital property? Maybe. The one thing that's for sure they'll say is property. I own buildings and property in London, Paris, Tokyo, New York, San Francisco, LA, Miami. They're the ones that own the 3 acres on the beach in Palm Beach that's worth $250 million right now. That's what they're buying. And why? Because they know that everybody else with money in the world is going to be competing to buy that from them if they want to sell it. And because it's scarce, desirable. Now, the perfect capital asset is something scarce, desirable, and portable, durable, maintainable, right? And what is that? That's Bitcoin.
Bitcoin may soon find itself at a critical price crossroads. Its average price across 3 different timeframes has now fallen within a tight cluster, signaling a potential breakout. After some nice coiling pricing action since March, by pouring Bitcoin trend model triggers, Real Vision's chief crypto analyst Jamie Coutts said United States-based spot Bitcoin exchange-traded funds, ETF, saw their second-best ever joint net inflow day of $886.6 million, according to preliminary data. The Fidelity Wise Origin Bitcoin Fund, FBTC, saw the largest inflow at $378.7 million, while BlackRock's Shares Bitcoin Trust, IBIT, was second with $274.4 million, according to early data from Farside Investors. The ARK21 Shares Bitcoin ETF, ARKB, was the third best performer with $138.7 million in net inflows, Farside data shows. It's the highest net inflows to the funds since March 12, when they took in a record $1.04 billion. Bitcoin hit an all-time high of $73,679 a day later on March 13. Farside Data reported that the Grayscale Bitcoin Trust, GBT, saw a rare inflow day of $28.2 million, the seventh inflow date since it converted from a closed-end fund to a spot ETF in January. Bloomberg ETF analyst Eric Palkshanis wrote on X that it was big-time flows all around today for the 10. The Bitcoin ETF bar #X's, which joined the market months after the others had launched and has struggled to see inflows. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.